Hello and welcome to this March 5th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at something a little different, taking a look at how various sectors have performed on a relative basis to the S&P 500. Now, it tells us a couple of things. Number one, if you take a look, and I've got all of these different sectors comparing the sector performance, the ETF that tracks a sector, comparing it to the overall S&P 500. So here at the top, you'll see consumer discretionary. Then I've got technology, financials, materials, and energy. And if we go all the way down, you will see that we've got the S&P 500 here at the bottom. Now, what I find really interesting here is that back at the beginning of this uptrend, off of the March 2009 lows, take a look at the consumer discretionary going higher. Technology, for the most part, just kind of held its own, but it wasn't falling. The financials were moving a lot higher. Materials were falling a lot higher, and really the only sector among these five aggressive sectors that was not performing at least equal to the S&P 500 was the energy group. So we had pretty wide participation to the upside, and the only way you can do this is to have money flowing into the market. Anytime you've got all the sectors, all the aggressive sectors moving up at the expense of the less aggressive or the more defensive sectors like utilities, like healthcare, like consumer staples, in order for the money to continue to flow into these aggressive sectors, basically what it's telling me is that there is new money coming into the market. Now, after this move up in those first couple of months, we've seen some other periods where there's been some fairly consistent relative strength across the various sectors, but nothing like what we saw in those first 2 months off the bottom. Instead, what we seem to be finding is that when one group starts to get hot on a relative basis, other sectors cool off. And this is simply an indication to us that the same money that's in the market is just rotating around in circles. Now, the market's been moving higher, so there's definitely some net new money coming in, but it's not to the extent that what we saw right off of the bottom back in March of 2009. The last couple of months is a perfect example of what I'm talking about. If you take a look at the relative strength since the beginning of 2010, you'll see that the consumer discretionary group's been doing very, very well, while technology has not been doing very well. In fact, technology's really been lagging. Financials have been kind of flat, and then both materials and energy have been falling on a relative basis. Now, you know, these ratios don't tell you whether the sector is going up or down. They simply tell you how the sector is performing relative to the entire S&P 500. So when you see the line going down, it just means that that group is underperforming. Now, this one of the ways I think you can trade this market, and it's not an easy market to trade, I'll tell you, I'm being totally honest, whether it's, you know, you're looking at it from the short side or the long side. This has been a very, very difficult market to try to trade. But one thing you can think about doing is taking a look at the sectors that are underperforming for a period of time, like technology, maybe like energy, and looking for some of the better looking stocks within those sectors, because if it's their turn to begin outperforming soon, the money will flow within those sectors to the healthier stocks. So that might be one way that you can play this market as we move forward here in March and maybe into April and May and so forth. As long as the money continues to rotate back and forth and is not completely coming out of the market, it could set up some nice opportunities in these underperforming sectors. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter. Have the chart of the day emailed directly to you. Happy trading.